All right, so this is our update for August, and we wanted to talk a little bit about a few things that are happening at the moment, 3 points that we found are very relevant. Now, the first one of these is from time to time we'll have a comment from a client where they'll go, "Oh, I was talking to my friend or some family members, and they said that they're on this rate, etc., this interest rate." And it turns out that that interest rate is often lower than mine or our situation, and they want to understand why. Now, we find that there are three factors to this normally to consider. The first is that some people don't always know what the interest rate or the real interest rate that they're on. We talk to a lot of people from time to time, and they actually have to go into internet banking and actually check before they actually find out what interest rate they're on, and they think that they're on a certain figure, and then that turns out to be something different. The second thing is that your friend or your colleague may have more equity or a deposit than you have, all right? And so this can be usually from the fact that at the moment, because we've had an increase in home prices over the last couple of years, and particularly over the last 6 months, if someone's refinanced recently and they've had a home loan before, they will have a lot more equity in their property, or they may have a lot more equity than you do now, particularly if you're a first home buyer. So let's have a look at it and see. So on the screen, we've got an example here from Macquarie Bank. Now, the reason why we're using Macquarie Bank is the way that Macquarie Bank set it out is they set it out in a very easy to follow format. So they've got a number of tiers. So the first tier you'll see here is they've got loans of up to 60% of the value of the property. Then they've got loans from 60 to 70%, then 70 to 80, 80 to 90, and then 90 to 95. So this is the same bank, so obviously for each of these loans, but you can have a look. So you can pay anywhere an interest rate from 2.29 if you've got an LVR of less than 60%, all the way through to 3.11 for a variable interest rate where you're borrowing somewhere between 90 and 95% of the purchase price of the property. So that's a big difference. It's nearly, just under 1% variance between those interest rates, and it all comes down to how much of the equity you've got in the property. Banks really like clients who've got a lot more equity in the property, and so that's why they reward those people, or they, by offering them a more attractive interest rate. The third reason could be that your friend may be on a fixed rate, all right? And at the moment, with a lot of the fixed rates being a bit lower than the variable rate, if they've got a fixed rate, some of the fixed rates, you can see that as well. They're in the high ones, low twos. Now, if you are a first home buyer, you might need to be on a variable rate because it could be one of part of the bank's rules. Alternatively, if you're doing a construction loan, so let's say you're buying some land and building, then you need to be on a variable rate for that construction process for it to happen. And so what that can mean is you're on a higher rate, but there's always a reason for it. Okay, so if you ever want to check it out with us and have a talk about it, don't hesitate to let us know. So the main thing to be getting a lower interest rate on your home is to build up more equity, or also save more cash if you're buying a deposit. As you can see, there's also a big change between borrowing just below 90% and borrowing above 90% as well. All right, so now I'm going to talk about something we've had a number of questions about, which is, should I fix my interest rate? We've had lots of calls about this in the last couple of weeks and last couple of months. And there's also been, I've noticed there's a lot of news about it in the media. All right, now this is my personal opinion, so it's just to give you a little bit of an idea, is that there are some wild predictions on interest rates going up and down, and you see some stuff where it's very, very extreme, and also they're talking about when they're going to happen and what's going to cause it, etc. Okay, now ultimately that's just a prediction, but I find that the more extreme the predictions, that usually gets more coverage and more clicks on the news, on the radio, on talkback, etc. Okay, and it gets shared more, and there's a lot more comments on it. If someone comes out and says, "Oh, look, we expect interest rates to largely stay the same for the next 3 years," that's pretty boring news. Whereas if someone says, "Look, they're going to double by Christmas," it's very exciting, it's pretty scary, and it gets people definitely sort of worked up, all right, and then looking at it and talking about it. So still, if you want to, there are some good deals around, particularly if you've got at least 20+% equity in your property. Interest rates have moved up a little bit where they were a few months ago. All right, so 3-6 months ago they were very slightly lower, but not a lot of difference. And always remember, if you want to do it, just consider maybe not fixing the full amount of your loan, keeping a chunk of it variable that has an offset account or a redraw that you can use to pay extra into to pay it off sooner, and gives you a bit of flexibility there and helps you save on the interest. Now we're going to talk about buying an investment property, because I've noticed that this has been a big change over the last couple of months. We've had a lot of people who are investors that are looking at getting back into the market, probably from about October, November through to maybe June of October, November last year, and then through to June this year. A lot of the calls that we had were more from people who were owner occupied and wanting to either buy their house or upgrade into a new house, etc. But in the last couple of months, we've noticed that investors are coming back into the market, and when I talk to them about why, it's because they're saying, look, interest rates are low. They've noticed that in their area that there are a shortage of investment properties or people who want to rent, and also they've got equity in their property now, so their home or wherever they're borrowing the money against has gone up a lot in value over the last 7-8 months. And there's also a promise of capital gain in the future. So they're thinking that capital growth is likely to continue. So if you own your own home now, you may have equity in your home that you didn't have 9 months ago. So what you can do is the process is you would normally find out how much equity you have. So you get the bank to value the property, and higher is better. And then you have a look at the difference between how much your property is worth and how much your loan is. And then that can give you a guide as to how much equity you've got. Now the thing when you're doing this, if you're going through this process, is you also have to look at your borrowing capacity as well. Because it's no good having equity in your property if you don't have enough borrowing capacity to be able to buy that. But a lot of our clients do have equity, and they also have good borrowing capacity, so they can tap into that equity and then use it to go and buy an investment property. We hope that's useful, and we hope you're enjoying spring, and if you can help with anything, don't hesitate to get in touch.